We all want to reach a point of financial independence, and that's a good time to be able to retire. Some will be able to retire early in life. Some are going to have to wait until they're older before they get to retire. But the faster you get to financial independence, the better for you. The more time you're going to have on your hands to enjoy life a little bit differently than just working or doing other things that would take up your time. So when we're talking about financial independence, we invest in stocks here a lot, but there's also a lot of different ways to invest. You can get a business, you can do other things. One of the businesses that you can get into is rental properties. And I want to point out today some of the benefits or disadvantages of having rental properties, along with discussing REITs, which is also buying rental properties, but actually just buying stocks into rental properties or other properties that are owned by other companies. So let's get into that a little bit now and see what you guys think about what choices you can make, or do you make both? Today we're making the choice of a house versus stocks. So buying a house or a rental property, whether it be a building or anything like that, I'm going to assume that you are going to have the money on hand to pay cash. So let's take a $150,000 investment and let's break that down. Now we know when you're buying a house, there's a lot of hidden costs. I want to go over some of those hidden costs right now. So one of the first costs that you're going to incur is a closing cost, and that is talking about mortgage origination fees. You're going to be talking about other fees such as the notary fees, surveys that they might have to do, recording fees. So all of these fees go together. It's usually about 2 to 5% of what you are buying. So if we're buying a $150,000 lot or a property or a house, then 2% would be $3,000 or 5% would be $7,500. Now the good thing about this, it's a one-time fee. It's not going to be a recurring fee over the years, but for that first year, you're going to have to take this into consideration when you're buying that house. One of the fees that you're going to have to worry about year after year is your property tax. Now a lot of times if you're a renter, an owner of these rental properties, you might get some sort of breaks on property taxes as well. But let's take into consideration on this $150,000 house that you're going to be paying, it could be anywhere between $1,500 to $3,000. Let's just say $3,000, and we'll put that into our equation for now. Next thing you're going to have is homeowners insurance. Now we're going to take into consideration that maybe you'll put in a year maybe $1,200 towards homeowners insurance, which with a renter you will be able to make that money back with no problems. However, you do have to take this into consideration when you're buying that house. The taxes keep on accumulating. Next is your school taxes. So for the districts, there's a different amount of fees that you're going to pay. I'm going to put in $2,000 per year that we're going to pay in school taxes. Remember, these can vary. These next two you're going to like because we are paying cash for this house. So when a person cannot pay down the 20% initially and then borrow the rest of the money, when they cannot do that, then they have to get private mortgage insurance to cover the cost. Now we are going to pay cash for this house, for this first investment we're making, so we don't have to pay anything for this. The next is the interest rate. Interest rate, if we were going to borrow money, you'd have to take that into consideration, how much it's going to cost per year. In this case, we're paying cash, zero. Great way to invest and buy something. This one I don't like, but depending where you buy your house, you're going to have a homeowners association fee, and those can vary from zero all the way up to whatever it is per year, but it could be $1,200 a year. It just varies. I've had different ones and different amounts in different neighborhoods. So let's say it's $250 per year for the homeowners association fees. Now we're buying a pre-existing house. It's already been built. Who knows how many years it's been. Hopefully it's a newer house that doesn't need a lot of modifications or repairs or remodeling. However, maintenance and repairs is going to cost you some money up front. A lot of times you want to do a little upgrade so that you can have new people come in and want to rent that location quick from you. So say the first year you put in about $5,000, just to help remodel the place, maybe fix a few things here and there, and that should be more than enough. The next cost would be utilities, and utilities, sometimes the person that's renting the location will only be paying for the water. So you let the renters actually take the utilities and pay those off. So I'm going to say you pay about $1,200 a year, and that's going to be a recurring cost, of course. So for the total hidden costs of that first year, if your closing cost is at 2%, you're going to be paying $15,650. If it's 5%, it's $20,150. Now remember, these are not recurring costs. Some of this are not recurring, so the only part that's recurring will be about $76.50, which means because you paid cash for this house, that the rest of that is going to be clear cash coming your way, which is perfect. And so this becomes a very good investment over time, but you see that there is hitting cost. But let's keep on going on this, and let's move on to some advantages of having rental properties as well. So the first one, of course, is what we just mentioned. You're going to have steady passive income coming your way every single year. As long as you have that place occupied and with renters in there, then you're not going to have a problem. You're going to have money coming your way. Of course, there's those recurring costs of repairs or problems that you have to fix, but for the most part, you're going to have income coming your way. That first property would have been all paid off, so now you can actually move on and buy some other properties with maybe not paying those whole properties off, but you have enough money with one property to be paying off the other as well, which is perfect. Of course, you're going to see that as you own this rental property and maybe more to come after this, you're going to start getting some financial security, and that's what we want to do. You want that financial security. You want to be able to be financially independent, and that's what we're striving for. Next, there is tax benefits to this. Now, rental incomes are not subject to self-employment tax, so that's a great benefit right there. Also, real estate investors are also given a lower tax rate for their long-term investments. So that is a great benefit when you start owning more and more properties, and these long-term investments have a lower tax rate. Probably one of the best advantages is that actually these real estate properties are going to be paid by other people for you. So in other words, if you put down 20% on a house and then rent it out, they're actually paying the house for you, and you don't have to worry about that. But at the end of that time period, you're going to have a house for yourself, and that's your property. And because that is your property, and over time prices on properties go up, the appreciation from that also is your benefit as well. You're going to make extra money if you decide to sell that house at any time. Next, we're going to talk about protection against inflation. As inflation goes up, things cost more, and so does your property. So the property values go up higher as well. You might have to pay more taxes because the property is valued at a higher rate. However, your house is worth a lot more, and that is perfect against inflation. And finally, with real estate investment, the nice thing about this is that you're creating a business where you are the boss. You make your decisions. You decide what goes, what doesn't go, and that is very much financial independence. When you get to a certain point that you go, all these properties are making money for me, I am the boss, I get to decide how I do all these things, it's perfect. So now that you see that there are advantages to owning properties, as well as there's some disadvantages because there's some hidden costs that are there, and as the years go by you still have to pay taxes, you still have to do different things of these. We're going to talk about buying REITs. Now, REITs are real estate investment trusts, and what these are stocks in a company that invest into other properties, and these companies have a great advantage in that you can get to invest into this company. Now let's talk about the advantages of investing into a company like this. First of all, it's a very high yield type of stock. You own part of that company. The company is required to pay out a high percentage of their profits to their stockholders. So you will be making good profit. The next advantage I like is liquidity. You can sell it very fast. These are stocks traded on the stock market. You don't have to wait for a broker or for somebody to drive by your house if you're trying to sell it or you're trying to rent it to get some movement going on there. You can actually just list it and say, okay, I'm going to sell it now, and it'll sell. As long as you have a company that trades well, then I think you're going to be able to get rid of those stocks if you need the cash quick. And that's the greatest thing about having one of these stocks. Another great thing about REITs are that it's diversification. Now you can invest into different types of stocks in the stock market. A lot of the S&P 500 companies you can invest into, but REITs usually don't have anything to do with the S&P 500. So this will give you a little more diversification. So as that goes up and down, these might stay steady or stronger and do well. So there is some diversification. So if you are investing in stocks, REITs are a good way to invest as well. So one of the pitfalls or disadvantages of having REITs are the tax rates. The tax rates are based on your ordinary income type of tax rate. And most of it is based on that, depending on what the REIT does. If it sells some of its properties, that will be taxed at a lower rate. However, most of it may be taxed at a higher rate that you usually would be taxed at. So I think you can see that there is a lot of ways that you can invest into real estate. There is going out there, buying a house, buying a building, renting it out, going through all that work to do it, or you can invest into stocks, into a REIT, and buy properties that way. There is a certain amount of beauty of having your own place that you can go and visit and go do that, as opposed to a stock where you only have the stock and you don't have buildings that you can go visit and say, oh, this is mine, even though you own part of the company. However, there is a choice to be made whether you want to deal with renters, deal with having the property taxes, having to deal with people that have to buy or sell your house for you, or if you want to just invest into the stocks, read up on the companies, make sure you're investing into good, strong companies so that they actually manage all the properties for you, and then you just reap the benefits by collecting some of the dividends. So now let me tell you what I would do and what my philosophy is on this. I actually like a little combination of both. I like having the REITs. I like buying those stocks because it's very easy. There's no maintenance fees. I don't have to fix anything. There's no utilities. There's nothing to deal with. You don't have to deal with renters. You don't have to deal with anything other than, is this company strong? Like, we've looked into NRZ quite a bit, and I know quite a bit of you out there have invested into NRZ, and I love that company, and it's still very strong and it's doing well. Even though it took a hit with all this coronavirus, it's still a good company, and I'm still buying more stocks into that because I'm bringing down that price. And I love doing that. I put my money in there. I put it into Apple. I put it into two different or three different REITs because I want to diversify a little bit. Now there's different REITs if you want to invest into properties that house computers. You want to do entertainment buildings. There's different REITs for everything. So you can invest into whatever properties you want, which is a wonderful thing. But I also like the idea of actually having something that you can go visit and say, this is mine here. I like that. I like the idea of having properties, buying more land, buying properties, buying buildings, and having that as a backup as well. Both can give you a good retirement. What's more hassle? Of course, renters are more hassle because you have to deal with the renter, you have to deal with the people, and personally, I would not handle those things. I would let somebody else handle that. I would get a manager to deal with it, That way I don't have to deal with that. The other thing, when you do have buildings like this, and if you do start buying more houses and more buildings, you do have to collect and have a good group of people that you have either paying constantly on salary or just on call so that they can go and fix things. Somebody that fixes a roof, somebody that fixes, air conditionings, it's a plumber, electrician. You want all of these people that already deal with you as a group so that if something goes wrong, you very quickly have somebody that can go fix the problem and take care of it quickly. So there is a lot that goes into having rental properties, and there's a lot of it that is fun, but a lot of it is work, and you can make it very easy over time when you have everything in place. So the choice is yours. What do you want to do? How do you want to invest your money? These are two very good options: rental properties or REITs, or both. For Alpha K, this is David Cruz, man. Thanks for watching. Like and subscribe, and we'll talk to you soon.